You ever go to the store, reach for something you buy all the time, and then you see the price and you're like, wait, what? It's gone up? It feels random, it's frustrating, and honestly, it's a bit of a mystery. Well, today, we're going to solve that mystery, and we're going to do it with a simple story about peppers. Let's figure this out.
Now, to help us make sense of all this market chaos, we've got an expert on our side. Meet Coach Kobo. He's seen it all, he gets how this stuff works, and he's going to be our guide to understanding what's really going on when prices go haywire.
So, let's start our story in a place where everything is, well, normal. Picture a perfectly stable market. The sun's out, people are shopping, and everything just makes sense. Life is good, right? The economy feels totally predictable. And the heart of this stable market is a price that's simple and fair. Just yesterday, if you wanted a full basket of those fresh peppers, it would cost you exactly one single note. You knew what to expect. Simple as that. But then, boom. Overnight, the whole game changes. That stability we were just talking about, gone. It's been replaced with confusion, with a little bit of worry. The market's been hit with a sudden price shock, and nobody really gets why. All of a sudden, that same basket of peppers, the one that cost one note yesterday, now costs two notes. The price has literally doubled, and you can just see the confusion on shoppers' faces. What on earth just happened? And right here, this is where our human brains kick in. One person looks at that new price and thinks, oh no, what if it's even higher tomorrow? I better buy now. And that one thought, it starts a ripple of panic through the entire market. You know how that goes. That fear just spreads like wildfire. More people see the rush, and they start buying too. Sellers see all this demand, and, well, they raise the prices again. What started at 2 notes shoots up to 4, and then, believe it or not, to 6. It becomes a total frenzy, and it's not even about hunger anymore. It's about the fear of losing out. So what is really going on here? This is where Coach Kobo steps back in. It's time to pull back the curtain and actually understand the economic gears that are turning behind all this chaos. This whole situation, this phenomenon we're watching unfold, it actually has a name. You've heard it before, inflation. And really, it's a pretty simple idea. Inflation is just what we call it when the price you pay for the very same thing keeps going up over time. Okay, so what kicked this whole thing off? It wasn't just random bad luck. Coach Kobo does some digging and finds the real problem. Heavy rains had completely wiped out a bunch of the pepper farms. All of a sudden, there were way fewer peppers to even bring to the market. In this little pepper story, it shows us the 3 big reasons inflation happens. First, you've got too few goods. That's our rained-out farms. The supply is low. Second, you have too much demand. That's everyone panic buying. And third, you end up with too much money, all chasing after those few peppers that are left. This whole thing creates what Coach Kobo calls the panic loop. It's a dangerous cycle. It starts when people expect prices to go up. So what do? They rush to buy now. But that just makes the supply shrink even faster, which, you guessed it, forces the prices to go even higher. It just keeps feeding itself. Okay, so we get why the price shot up, but what does that actually mean for the money you have in your pocket? Because this isn't just a story about peppers. This is about what inflation does to your wallet. Just imagine one of those shoppers holding that single note. Just the day before, that note felt powerful. It represented a whole basket of peppers. Now, holding that exact same note, it feels weak. It can't get them what they need anymore. And this, right here, is the real gut punch of inflation. The physical paper note in your hand looks exactly the same, but what it can buy you has been slashed in half. Your money didn't vanish, its power did. You know, there's a formal name for this concept. It's called purchasing power. It's the real measure of what your money is worth. So when inflation is high, your purchasing power drops. Each and every note, every dollar, every coin, it just buys you a little bit less than it did before.
So is this just the new reality? Is the market broken forever? Well, not necessarily. You see, markets have this funny way of trying to find their balance again. The panic can't go on forever.
And then finally, some good news. The farms start to recover from the bad weather. New shipments of peppers start arriving at the market. And suddenly, there are more baskets to go around. As soon as the supply increases, the panic starts to fade, and the market begins to settle down.
So let's just do a quick recap of Coach Kobo's big takeaways. It's pretty simple, really. Less supply, that means higher prices. More demand, that also means higher prices. And more money chasing after the same stuff, you got it, higher prices. Those are the basic rules of the game. And this brings us to Coach Kobo's final piece of wisdom. You can get caught up in all the fear, all the hype, but at the end of the day, the price is just a number. It's a number that reflects the simple truth of what's available versus what people want. The market doesn't lie. The numbers talk.
Our little pepper market found its balance again, all because the supply recovered. But that leaves us with a pretty big question. What happens when it doesn't? What happens when that panic loop just keeps spinning and spinning, turning a little market problem into a huge national crisis? And that, right there, is exactly why governments and banks work so hard to keep inflation under control, to stop a simple story like this from becoming everyone's reality.